Good evening, everyone. Welcome to closing comments here on March 18th. Let's take a look at our charts and see what happened today. Equity markets gave back most, if not all, of their gains from Monday. You see the S&P basically closing unchanged, reversing all of Monday's action. The Nasdaq was the weakest, closing at a new daily low below Monday's low, and the Dow managed to stay inside Monday's range. So just a little bit of nervousness as we approach the FOMC day tomorrow. We have a rate decision as well as a statement from Jerome Powell. Not a lot of conviction either way in this market. Really could go either direction from here. No doubt about it, though, we will be seeing another influx of volatility, so just be prepared for that. Just going to have to wait and see how the Fed reacts to this recent correction we've had, as well as some of the recent data we've been seeing with inflation and jobs numbers. We'll see what they have to say, and the market will just have to see how the market reacts to that. So, no doubt about it, there will be some volatility, and I encourage everyone to stay defensive until we know the Fed has a nice soft course for us, or we see some bases built here on the indexes as well as some of the underlying names that will offer good buy points for a potential uptrend to break out in the future. But at the moment, not a whole lot to be excited about. Just encourage everyone to stay defensive. Next up, we have crude oil. Crude oil had a pretty nice sell-off today. Overnight action tested our prior day high as well as the 20-day average, and the opening range this morning was up here above 68, and we pretty much saw a $2 sell-off from there all day coming off the open. Bears stepping in and showing they're in control here. I would anticipate the Bears to keep grinding lower down towards 65 and potentially beyond that for a breakdown of some of these prior levels in the near future. But at the moment, Bears expect them just to push down towards 65, and we'll see what kind of reaction we have down at that level to come from there. So next up, we have the June live cattle. Nice balanced day today in the cattle markets. Price basically closing unchanged for the day, hanging out here around 201. As mentioned yesterday, we are seeing a bit of overextended readings here in the cattle market, saying things are a bit hot after we ran about 15-16 bucks off of this little shakeout that we saw 2 weeks ago. This June contract hanging out here near all-time highs, while these back months continue to make new all-time highs on a daily basis. With prices being this overextended, wouldn't be surprised to see a pause in the action here and price kind of trade sideways around 2, or potentially even a pullback and try and find support somewhere down here near these moving averages, with the 20-day average being the first stop. At the moment, though, the trend looks good, and expect this thing to keep drifting higher until we see some of these prior day lows start to give out. Same story over here in the feeders. Nice balanced day at the top of this big up move we've seen over the last 2 or 3 weeks. Feeders are just hanging out near this 285 to 290 all the way down the board. Bulls remain strong. The uptrend remains intact. Everything looks good. Just seeing also overextended readings here with feeders reading about 4.5 on the heat reading. Wouldn't be surprised to see a pause in the action or a pullback here as well. 20-day average hanging out here around this prior high would be a good spot for a retest. We'll see if we get there. But in the meantime, expect this thing to keep drifting higher until we see some new daily lows. Last market here is corn. We saw a little bit more downside today, but price just staying pretty close to this 460 area. You do see on a lower time frame here that this price is contracting here, starting to see these lower highs come in, putting pressure on this 456 level, which is our pivot for the week. These equal lows down here around 456, and this pressure from these lower highs coming down. We do expect this market to break down below 456 and really continue on the second leg. However, if this thing tightens up and the bears aren't able to get that done, we could see a break of this downtrend line and price could pop back up towards 470. But given the big picture trend, we are expecting this market to break down and keep pushing lower down into the 450 to 440 area over the next few days here. So that's all we got. Hope everyone has a good night. See you tomorrow.